Yeah, well, thank you, Bethany, and thank you, Jake and Robin. Um, this morning, I'm going to go through a Form 990 and IRS update with you. Um, who am I? Well, I'm Brent Alexander. I'm a shareholder and audit lead for the Des Moines market of Bergen KDV. I'm also a member of the firm's Audit and Accounting Quality Control Committee. And I work with approximately 50 nonprofits in an audit capacity and a few more relative to 990s. I've been doing these not-for-profit seminars for over 15 years, and I may be the only person in the firm that remembers preparing a 1983 Form 990. So today's agenda, and Bethany, if we'll flip, there we go. I'm going to talk a little bit about the current state of dealing with the IRS, a very, very brief Form 990 series update, and then I'm going to share some takeaways from the 2022 AICPA not-for-profit conference related to 990s. So the first thing I want to talk about is dealing with the IRS, and really it's more of the current state. And so many of us and many of you have been having issues in dealing with the IRS since the start of the pandemic, or in some cases maybe prior to the start of the pandemic, particularly when you need to contact them relative to, let's say, an IRS notice that you might have received. And really, to understand the current state of dealing with the IRS, it's helpful to understand what's happened over the last several years. And so if we look at where the IRS was prior to the pandemic, they were dealing with very outdated IT systems. Their main focus at that time, back in early 2020, prior to the pandemic, was focusing on cyber threats. They were also dealing with a retiring workforce and a brain drain. And what we mean by brain drain is that many of the key thought leaders at the IRS level were leaving or were retiring. Also, there was a lack of congressional funding. And immediately prior to the pandemic, the IRS was in the process of implementing the Taxpayer First Act of 2019. This not only restructured the IRS, but also implemented mandatory e-filing, which would include Form 990s. And so currently, what the IRS is dealing with is a very tight employment market. It's very difficult for them to hire and fill positions. Fewer people equals an increased caseload and backlogs. Also, they're currently charged with implementing multiple social programs, which really stem from the COVID-19 relief bills. And they're dealing with pandemic workforce restrictions, social distancing, and the like. And also, as they were prior to the pandemic, they're still dealing to a large degree with outdated systems. So if we could advance the slide here. What's been the result of this? Well, according to a March 18th, 2022 U.S. Treasury Inspector General for Tax Administration report and a annual 2021 National Taxpayers Advocate report, as of the beginning of 2022, there were still nearly 5 million pieces of paper correspondence received by the IRS, but hadn't been worked yet. I think where this impacts you and us to a large degree would be responses to IRS notices and processing of ERC, Employee Retention Credit refunds. And a little bit later in today's webinar, we'll talk more about these ERC refunds. Also, as of the beginning of 2022, IRS representatives were only able to answer about 11% of the calls that they receive. And in many cases, you may have called the IRS and you may find yourself getting kicked out because of high volume call load. Also, you may be on hold for a period of time, and you may eventually get dropped from the call. I know this isn't painting a very rosy picture, but I think what this tells us is that if you're having these issues, you're not alone. This is what your industry and what us as practitioners are dealing with. Another potential issue that's out there on the horizon, there's a thing that's called the Exempt Organization Master Business File, EOMBF for short. It's not being updated timely, but it's the tool that's used to allow for e-filing. I think the question that we have as practitioners, what happens if this isn't updated with the next round of e-filing? Our e-file is going to be rejected. I guess if there's one small positive development, and again, this probably doesn't have very broad applicability, but the IRS is now allowing multi-member LLC entities to become tax exempt. So there are some possibilities out there with these for nonprofit organizations that may want to own an LLC with other nonprofit organizations. So if we go to the next slide, Bethany, 2021 Form 990 updates. So the question here is, what's changed with calendar 2021 and fiscal 2022 990 filings? The answer is not much. There were very minor changes to the 990T and very little else. In my 15 plus years of doing these updates and webinars, this is the fewest changes year over year that I've ever seen. And so there's really not much to go over with you relative to this. Next slide. So the fourth CPE code word that we have is nonprofit. At least that's 4 according to my list here. The last thing that I want to share with you is some takeaways, really several of these from the annual AICPA Not-for-Profit Industry Conference that was held on June 19th and June 21. There are quite a number of sessions that covered 990 related topics, and I thought it'd be beneficial to share several of the takeaways that I had from these sessions. So the first takeaway relates to the Paycheck Protection Program loans, the PPP loans, and the employee retention credits, how these are reflected on the 990s. So if we look at the PPP loans, the general belief is that there's a considerable amount of incorrect 990 reporting that's occurred relative to PPP loans. The proper reporting of these, as a reminder to people, and this was something that was really kind of updated with the 2020 Form 990 instructions, but you should report the PPP loan is revenue in your 990 in the year that it's forgiven. And this is irrespective of how you treat it for your financial statements. That is, irrespective of what year you recognize it in your financial statements. So the IRS instructions on this are pretty prescriptive. So if you do have one of those situations where you've recognized the PPP loan forgiveness, or recognized the PPP loan itself on your financial statements in a year other than when it was forgiven, you would reflect this as a reconciling item on your 990, both in Part 12 of the Core Form 990, which is where you reconcile what's in the 990 to your financial statements. And if you have an audit, it would also be recorded as a reconciling item in Schedule D. That's where you're reconciling your 990 to your audited statements. Also, you would include the forgiveness in Part 8 of the Form 990 that's in the Statement of Revenue on line 1E under government grants. And in Schedule B, your schedule of contributors, if the reporting threshold is met. So if we go to the next slide, a little bit about employee retention credits. So the proper, well, I guess I'll talk to you about the issue here really. We believe that you should reflect on 990, the employee retention credits in the year that you record it for financial statement purposes. That being said, the IRS Form 990 instructions are completely silent on this, on how to treat ERC, and so it leads to a lot of diversity in practice. Some preparers of 990s will show employee retention credits as a government grant, which might improve the public support percentage test on your Schedule A. Others will show it as a reduction of expenses. Our recommendation is that you reflect the employee retention credits in the year that you record for financial statements as miscellaneous revenue on Part 8, the Statement of Revenue in the Form 990 in columns A and B, and don't include in Schedule B. However, I think you may want to reconsider this if you really need that revenue item to meet the 33 1/3 public support test from Schedule A. That sounds a little bit technical, but generally speaking, I think the rule would be miscellaneous revenue. There might be exceptions if you're really close on the public support test in Schedule A. So the next takeaway on the following slide relates to Schedule A items. This also gets a little bit complicated, but if you find yourself with a 990 where you've reflected something incorrect in a prior Schedule A, parts 2 or 3, and on the Schedule A, what you're showing there is you're showing the current year plus the preceding 4. So if you find something needs to be corrected from a prior year, you don't need to amend your Form 990, but rather just change it in that prior year on your current year schedule, and then address at the end of Schedule A in Part 6, which is supplemental information. The next takeaway on this that I had was it's the best, if you'll flip back, please, Bethany. It's a best practice for Part 3 filers to see if it's feasible to use Part 2 of Schedule A, and this is due to the disqualified persons exclusions under Part 3. So if you're a Part 3 filer, what this does is you need to include receipts from related exempt activities in both the denominator and numerator of the public support test, whereas Part 2 filers generally exclude exempt activities, but rather focus on contributions. The problem with being a Part 3 filer is that grants and receipts from disqualified persons need to be tracked and subtracted from the numerator for the public support test. It seems simple enough on the surface, but for most organizations, a disqualified person would include substantial contributors, officers, directors, and family members. And so if you are a Part 3 filer, and most all of you would probably have some substantial contributors, some officers, directors, and related family members, and you would need to track those as well. But once a contributor becomes a substantial contributor for the purposes of being a disqualified person, they remain so in perpetuity. And so at that point, tracking becomes kind of onerous. So I think overall, the big takeaway here is if your organization is completing their Schedule A as a Part 3 filer, you really need to consider whether or not it's feasible to move to Part 2. Also, if you're a supporting organization, it may be possible to move from being a supporting organization to a Part 2. But if you want to look at this, I would really suggest that you talk to your outside CPA or your Form 990 preparer to make sure that you go through the necessary steps to do that. So if we go to the next slide, third takeaway that we had relates to contributions in Schedule B. Really three things there: charitable contribution substantiation. And when you as a charitable organization provide gift acknowledgments for non-cash items, you should really provide a description as opposed to a value of the non-cash contribution. I think the exception for that would be is if you receive a marketable security, a stock as a donation, and you convert that immediately to cash. Then I think you should be able to provide the value there. Also, in the eyes of the IRS, raffles do not have a donative element, and auction winners should not be given gift acknowledgments. So what the IRS has claimed in the past is that whatever the highest bid is, that's the true fair market value. So no donative element. So in other words, you should not give gift acknowledgments for those donor winners. And lastly, which excuse me, I found to be interesting, is that donor advised funds. This is becoming a frequent occurrence where individual donors make their contributions through a donor advised fund. And the best practice in terms of reporting is not to attribute that to the person, but rather the sponsoring organization. So for example, if John and Mary Smith give a contribution through a donor advised fund of your community foundation, when you report on Schedule B, you should be reporting that that contribution comes from the community foundation donor advised fund as opposed to John and Mary Smith. So that's about it that I have for 990s. Again, this was rather brief. And Bethany, did we have any questions?
We did get one. The first one I'm seeing here, this kind of seems all challenging with the IRS, and we've been trying to get through on our phone. What should we do instead? And does it seem like it'll get any better soon?
Well, that's a great question. Unfortunately, there's really no silver bullet here for being able to contact the IRS. Generally speaking, a lot of you, when you contact the IRS, you may need to do so in regard to some type of a notice. What's happened, I think I gave a statistic earlier that said at the beginning of the year, only 11% of the calls were being answered. I did see something recently in the New York Times that said that percentage is now up closer to 20. In short, the answer is to keep trying. When you do call the IRS, be prepared to be put on hold and be prepared to multitask. Obviously, have your information ready that you'll need to give to them: a copy of the notice, if it relates to a return, a copy of that return, the specifics of what you want to talk about. But be prepared to be put on hold for a lengthy period of time. And if in fact 20% of calls are being answered, the odds are that you may have to call 5 times before you finally get through. We believe that IRS response time is improving. It's not going to be perfect. They're short people. And so in short, you just really need to keep on trying.